Good morning, folks. Todd Rich here with Nadex. And with me is Brian Caprice from Keep Trading Simple. This is Nadex Morning Analysis. Before Brian and I jump into taking a look at hot spots in the market today, and we've got quite a few, some interesting news out this morning with economic numbers. I need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. With that, before I flip it over to Brian, I just want to tee up what we're looking at today. So first, U.S. GDP numbers came out for the fourth quarter, and we saw for the whole year. Things aren't pretty. As Brian and I have been talking about, what happens in the markets and what happens in the economy are two different things. So taking the news from what the economy is actually doing and how to potentially find opportunities in the markets, they're separate. Now, what did we actually see? Well, first of all, in 2019, we had 2.2% economic growth as measured by the GDP. In 2020, we contracted 3.5%. That is not good. It is actually the worst contraction that the U.S. has seen since World War II. It hasn't happened that starkly since 1946. Now, just to put that in context, we had the Great Recession from 2007 to 2009. U.S. is right now in a recession. It's coming up on a year. It started last February. And then the fourth quarter numbers, while we did expand GDP at 4%, everyone was expecting 4.3%. So the recovery is wavering. We are still stuck in this recession. And what does that mean? And I'm going to flip it over to Brian and let him fill you in on some other things, because we're seeing it impact equity indexes, commodities, and for an interesting reason, we're not seeing so much in foreign exchange markets, but we'll explain. Brian, you want to catch us up to date with what Powell was saying yesterday?
Yeah, sure. Yeah, I mean, and the forecast is different. Different websites had anywhere between 4.2 and 4.3. So yeah, it was a slight miss. But one important thing to note about that, there was a higher adjustment on the previous one. So it's kind of one of those strange numbers that people have a hard time absorbing. And that was coupled with unemployment claims being about 30 or 40,000 less than what was expected, which is also good. And then obviously the trade balance also got a little bit better. So it's a weird morning. There was positive news and there was negative news. This is kind of the highlights, the kind of 50,000 view of what Powell had to say yesterday. First and foremost, though, talking about how we're a long way from recovery. I think a lot of people have been kind of misled with what we see in the news, like all we need is a vaccine and we're back to normal, and that's not really the case. It's we're going to be in this. It's not just going to be by summer. We're fully back, and that's what a lot of the internal kind of numbers have showed us. But I don't feel that that's what many people have believed, that I'm vaccinated, my life is back to normal, and it's not really that way. So, Powell talking about this. Powell is mentioning that the real unemployment rate is probably closer to 10%. This is an interesting number too. Very hard to actually gauge what the real number is. The last time we really heard much about the real unemployment rate was really back when Obama took over. During that time, because we had seen that, the unemployment rate's going higher, but it was a false number because there was less people out looking for jobs. So it wasn't a true kind of overview of it, right? And right now it's kind of the same thing as well. We don't really know what the real unemployment rate is because, again, there are certain people that are still home dealing with virtual schooling. All those things are supposed to go back, but how many people are actually unemployed versus really don't have a job type situation? So we're underemployed. Underemployed is another very big thing. So that's a big number. And then here's kind of his look on inflation. We mentioned before, the gold's not really going to pop until inflation has reared its head. Obviously, news like today, it's like, we're going to need a lot more stimulus. This is bad, right? That will cause, and again, what he says, the coming months, a rise in inflation will be transient, meaning we'll see it and it'll disappear. We'll be patient and not react when we see modest bumps in inflation. Again, that's kind of interesting to know that they're expecting, a bump here and there, but they don't see long-term inflation yet. Very unlikely that we'll see troubling inflation, which means all the inflation that we have, that we will see, will most likely be the good kind that we need. And we're not going to adopt a formula on inflation, meaning that inflation is not even on the radar right now. So we're going to continue in these things. And again, there's a couple other things in there that global forces and holding inflation down are still in effect. Again, obviously, everybody knows what the global forces are. Whoops, I keep clicking that. The global forces would be the pandemic. Right. Don't expect to see inflation dynamics to change in the near term. We're more concerned about the recovery than inflation. And we'd like to see, we'd actually like to see higher inflation. So they're kind of, keeping that environment there. So going across, and again, it's kind of a dollar story. I mean, here's gold. You guys can see since gold came out, actually gold started to kind of rally right after that news came in. And again, I don't have this set correctly. Oh no, I do. I have to set correctly. Right with that news is when we saw the really big spike up in gold. Now, what's interesting about gold is, it really kind of forced its way down into those 1830s. We've talked about those 1830s numbers now for a few weeks as being an area. We mentioned that it looked like the bracket had wanted to move higher, but with everything we saw yesterday in the indices, we can see that it just pushed back down again, back into that same kind of, basing level, same kind of channeling. And there was hope that it would hold, but unfortunately, this last spike kind of pushed us back down to where we were 2-3 weeks ago. Now, the big spike today is pretty interesting. Again, really seeing any inflationary factors. This is a emotional response to seeing something like unemployment. A 0.2 miss in the GDP shouldn't have been a huge cause like this because, again, this should have come more with FOMC notes yesterday, and we did see a spike from it. So this is kind of one of those emotional responses. I think that this will give us an opportunity to retrace today. Question is it going to be the 1860, the old top we were worried about? We have levels of sellers here. We have some sellers up here at 1868 as well as the 1870. So we got a couple areas. And again, you can see here, I'll mark them off with, let me get a different color here. Let's turn this to blue real quick so you guys can see it. You can see that, large spike from this level. Very, very large spike from this level here, right? Hit it again, very large spike down. This one, again, another big spike down again. And now we had that parabolic move up, which again, here's the last big pair that we had. You can see once the top gets put in, that's where the rolls happen. So, for me today, I'm really kind of sitting, trying to figure out where is this going to stabilize? Where will we start to see base? And will we have one of those failure to go higher tops where we have a nice little, and again, that would be done more on a 30-minute. Once we start to get that top in there, look for some type of a rollover. And again, 1860 was a magical level the last few weeks. The old magic is going to work, or if we need one of the new levels.
So I'm going to bring up the Nadex platform real quickly and just kind of take a look, and you can see, this is a fairly significant emotional move. It is making it through that 1860-ish level that we had called for earlier. So, 1870 is all the way up here. But it did. The interesting thing is that 1830s level, definitely seeing that support and this large spike up. What could you do with this? There are some knockouts in here. These are daily. If you wanted to look at, shorter term, just this morning, I think we've actually gone through all of the strikes that end in an hour. That's how dramatic this has been. It looks like all these right now, at least for the next hour, are all headed toward 100. You can see that over on the left-hand side. So
yeah, a big spike like this, unfortunately, that messes up a lot of these. And again, that's where we talk about different product suites. This type of spike can happen in any of the asset classes. One of the best things about knockouts is when you have a move like this, a lot of times the binary and call spreads become invalid because there's just so much movement from when the contracts are printed. But something like a knockout gets reprinted and it comes more in touch with kind of where current price is.
Which is what I just brought up. And, taking a look at these knockouts, you can always click on the left-hand side to see where those actual levels are. And if you're looking for a retrace, at some point, if we start getting up close to 1870, there might be a way to do that using, in a defined risk, defined reward way, using a knockout where, again, you're looking for a pullback here, just trading the price of gold here. Purely Delta One. But if it were to just take off for some reason, if you were to,
it's limited risk. Yeah, it's the market, so there's always risk involved in it. So right. Picking the right one always matters.
So it might be interesting at this point, depending upon what you're looking for, and if I want to draw in that 1970 level, although you can see it on the chart. It's right here. If this is that 1870 level would be right up in here. So, take a look. Knockouts might be an interesting way to play this if you see after you see this parabolic, large emotional spike up after this GDP number came out to see some type of retracement at some point. That could be kind of interesting. I know we've got. I want to keep moving because we got a lot of other
Sure.
things we want to talk about.
Yep.
One other thing I just want to cover it quickly. I mentioned that it's not. This news isn't impacting so much all of the foreign exchange markets. The pound dollar. We could even look at the euro US dollar. I just want to look at them quickly just because they're chopping sideways. This isn't impacting those markets. So I might.
Yeah, I mean, it is a little bit. So, I mean, obviously it's going to be, and actually it's been delayed. When you and I first started looking at this, you can see there was a little response to it. This is the pound dollar, and we're pushing up. But again, in this market, there are, again, same things, a lot of levels that are chopping back and forth in here. And again, a large emotional response here. It's not going to be the same percentage. I mean, you can see this is a bit of a run up. I mean, it's decent. It's about 40 pips in 30 minutes. So again, it is double what it typically the average is going to do during that time frame. But is it a huge, I mean, looking across at the, gold, this is the largest candle, largest single body candle up. You can see over in currencies, here's the pound dollar, right? You can see, I forgot I got to do the cursor thing here. You can see here, this is not it's not the biggest candle. Right? I mean, it's a bigger one, but it's not the biggest without a doubt. And then again, bringing it across the euro dollar, it's the same thing. It's popping up, and we got a little level where we've had sellers step in, and we're going from that low in the curve back in a high. What's interesting, and again, looking at the pound dollar, let me go back to the pound dollar real quick. Looking at the pound dollar, you can see, again, we are in an area right now where we had a little bit of a gap in the past, and we've had some sellers step in. Looking at the euro dollar, we are at an area where, again, it spiked up, went a little bit high, but now we got a red candle, and it looks like it could reverse right back down, bring it back across. Look at gold. Gold is now also, it's in that same spot. If I go to oil, I'm pretty sure oil is going to be in the same spot as well. So it's kind of one of those things where, yes, these large emotional responses, every single one of them is telling me the same story, that we had gold weakness, right? Or I'm sorry, dollar weakness. Well, guess what? They're all at areas now where in each of those individual assets, it tends to be a reversal point. So I don't know, large emotional response like this into levels where there were sellers or buyers, depending on what asset class you're in. Again, it's kind of setting up for reversals on many of these things,
Yep.
And these are parabolic retracements.
So I just want to, I'm going to bring up the pound dollar just quickly, just because I want to show what we've been talking about this week. Over on the left, I mean, you've got these two X's, but this was that European sell-off in the pound dollar, and then during the U.S. session it took off, then it chopped sideways. It sort of made the same type of move yesterday. We were calling it out. It sold off in that European session, and then it started to rally through the U.S. session. Then numbers start coming out, and we realize the entire global economy is struggling. Everyone's having the same problems. This isn't just happening in the US. We're seeing it in the UK. We're seeing it in Europe. And that's when we've just watched the pound dollar sort of chop sideways. We are seeing some moves in here, but not these extreme moves that we were seeing, say, 2 days ago. Much smaller moves. So not as hugely impactful in the currency markets. Now, I just briefly want to mention, we're seeing some activity in the indexes. When the economy is struggling, it's rather interesting that people are taking a look at actual valuations, GameStop aside, and you're seeing the Dow actually being support. Actually, you know what? I'm taking a look now. They're all up about 0.5%. So I take that back. We're seeing it across the board. The Dow, the Nasdaq, and the S&P all trending a little higher. We've kind of come up on time. The one last thing I thought I might toss it back over to you, Brian, is you mentioned oil. Do you want to just quickly do oil as we wrap things up here?
Yeah, I'll just pop over real quick to it.
Okay, cool.
There's our oil. There's the one that we've been using for the last week. And again, you guys can see weak dollar. What do we get here? We got about almost an entire dollar worth of movement straight up on no oil news. So it's purely a dollar speculation at this point. Again, dollar weakening, giving some strength to crude oil. And again, it was popping up to that not magical, but 53.60 is an area where, again, we've seen a bunch of sellers step in here, step in here, step in here, and coming across. We're coming up, large emotional spike, very, very weak dollar. again, we'll have to weather the initial kind of U.S. Open, but after that, yeah.
Yep.
Could be
That
interesting
could be
rollover.
interesting. Take a look at the oil binaries over there on Nadex. When you get a chance, there could be, if you start seeing that turnover once it gets up into that area, where sellers step in around 53.60. With that, I want to thank everyone for joining us this morning. The U.S. equities open in 15 minutes. Brian and I will be back tomorrow. If you got any questions for Nadex, please email us customerservice@nadex.com. Any questions for Brian, you can email him at support@keeptradingsimple.com. And with that, we want to wish you good luck in the markets. Catch